Tim Hammond, Bobby Montreuil of Hammond Realty. Thanks for joining, you guys. You've got an upcoming podcast, Growing the Futures Productions, on Tuesday, and the topics look really interesting. Tim, you have the view that the price for good quality farmland is holding or maybe increasing, but that's not the same that you're seeing with more marginal or poorer or average land. Could you just address that a bit?
Yeah, absolutely. So, yeah, good land in good areas. There's still good demand. We got competing offers for it. It's still kind of driving it up a little bit, but for more average land or below average land, that same kind of competition isn't there, and so it is sticking on the market longer. Where I feel we're just kind of moving sideways. Values are just kind of holding their own, and in some cases they've even dropped.
So what do you attribute this to? Just tighter margins and people being more selective?
Yes, I think so. I think it's the risk profile, right? And good land tends to be in a little bit better rainfall area. There's less risk. The revenue on that land is more reliable. Whereas average land, it's a little more sensitive, right? And if we don't get the rains, it can impact, margins and revenue pretty quickly. And I think that's being reflected in the price right now.
Bobby, you work with Hammond Realty, but you also farm in West Central Saskatchewan. I was surprised when the FCC Farmland Values Report came out, and the West Central Saskatchewan showed the smallest increase of any of the regions at around 4%. Crops were good in the West Central region, like many other areas. Were you surprised to see that result? And of course, that's a bit of history now. It's not necessarily reflective of where we are January, February, March. But were you surprised by that?
A little bit, and only because in the past we've always grown and kind of kept up with the rest of the province. I know sort of in the mid-teens, 2015 and that, we were sort of the higher end of the province, and which made sense. We grew good crops in that. But then as we kind of got in the drought years that, the east and the northeast and those areas didn't get into, their prices really took off. And although we were in some drought seasons, our prices were still playing catch up with them and kind of just trending up based on those values. So I think finally maybe things are coming to reality there where we're not quite, we're kind of on par now with the rest of the province. I think Tim spoke to this previously, but in the West Central area where we farm, we had record yields this year. And just when I sat down with my accountant kind of before Christmas to go through the year, when the numbers shook out with higher, input prices and slagging commodity prices, it was just an okay year. It wasn't phenomenal. So I think that's part of the reason we're kind of just finally leveling out.
So what does the outlook look like, Bobby, with prices still no great shakes, and if you factor in the potential for an average yield and looking at where input costs are, how does 2026 look in your operation?
Well, specifically to us, we are analyzing risk, I think, similar to what we're seeing at Hammond Realty with our buyer clients. We're in a bit of a holding pattern when it comes to expanding. We're trying to hedge our risk best we can, whether it be, pre-buy some inputs in fuel, really analyze our insurance, or, maybe capitalize on some forward selling, act of God clauses, that sort of thing. Anything to minimize risk is kind of the name of the game for us.
Good strategies. Tim, it was mentioned that leaseback to seller options are seeing more discussion. Basically, I'll sell my land to an investor if I get to lease it back. Are you seeing much of that trend or much of that discussion happening?
Yes, probably since about January, we noticed a real uptake in that, and so producers were phoning us, and they're like, we don't want to sell the whole farm, we just want to sell a half or 3/4, but we would really like to rent it back, right? Do you have an investor for that? And so we haven't had those kind of calls since the early 2000s, really, and that had to do with stress, right? Like with debt. And so it's not catastrophic, and they're looking for micro ways to kind of adjust. And I think it's healthy, but I think it does reflect the risk that's in the industry right now.
So they're able to potentially restructure, clear up a little bit of debt, but still not lose their land base.
Yeah, ideally, if they rent it back from an investor, their land base hasn't changed, right? So that's the optimal thing. But we're finding in some cases we can't find an investor to do that, and so they're losing that land. And so yes, they paid off debt, but they've also lost revenue generating acres for next year.
So when you look at it, would their lease rates be less than what they might be paying as far as interest rates if they're still owing money on that land?
Yeah, I would say if they could lease it back, it would be like a 3%, 3 to 3.5% return. If it's really good land, it's only 2.5%. So that is much cheaper than current interest rates, anyways.
Do you see much investor interest then, or is investor interest diminished because of those low returns on investment?
I think overall it has softened, right? Because land values are all-time highs and rents, they're at all-time highs too, but they never appreciated at the same rate that land values did. So it's the shine has come off it, but there are some disciplined investors out there that are still doing deals.
What are you seeing for lease rates, Bobby? I don't know whether you guys lease much land, but maybe you're aware of what's happening in the area. Was there a lot of renegotiation happening, or lease rates staying the same, or any observations in that regard?
Well, specific to my farm, there was no renegotiations this year, but I know an agent at our brokerage that deals with lease rates. He said it was a real slug this year trying to renegotiate. Just the tenants are a little more apprehensive to re-up or increase their rents. There's not as much demand as there was.
Bobby Montreuil, Tim Hammond, thanks very much. We look forward to the podcast next Tuesday. Thanks for joining me.
Thanks so much, Kevin.
Yeah, thanks for having me.